No, the difference, it's Team Tech Trust at Annex Wealth Management. You know, it's human nature to want the best deal on goods and services. We want to pay the least, but we want to get the most, and why not? It's our hard-earned money. You've also heard the old adage, get what you pay for. Brandon Lehman, Wealth Manager at Annex Wealth Management. Can I get an amen to that?
I agree 100%.
Right? Welcome back. When it comes to your investment and retirement plan, the value of an advisor is an important discussion.
It is. You really need to know, one, who you're working with and what you're getting out of that relationship. There's more to it than just investments, and we want to take a deep dive into really everything that comes from that relationship of working with a valued partner on the financial advising side.
For sure. Russell Investments put out a really nice piece that caught your eye, and it's an excellent 5-step process that breaks it down. And we're going to talk about that. They do A, B, C, P, and T. A is first up. That is annual rebalancing of investment portfolios. And we talk about this a lot.
Yeah, we do. And why this is so important to understand is because as the years move along, portfolios change. Every year you could have some things that do well, some things that don't. And if you're not paying attention, if you don't have somebody behind you guiding you, helping you, looking for those opportunities, you're going to miss out on the opportunities to basically sell high and buy low. A great stat is if you look back, and Russell Investments put this out in a study they did from January 1st, 2009, if you had a basic 60-40 portfolio and you didn't make any changes to that portfolio, 10 years later on December 31st, 2019, you would have 21% more equity exposure and 18% less bond exposure without doing any rebalancing.
It gets out of whack.
It does. And what's that doing is it takes you from what you consider a moderate investor, and now you're actually a more moderately aggressive investor. You've actually moved up the risk scope through this process by not making any changes.
Now, they talk about annual rebalancing. We do it more often, and they probably do as well.
Correct. So there's the annual rebalancing where if you look at it in your 401k, you can kind of set up that tool. But here at Annex, we do it a little bit more different. We're constantly looking for the opportunities to take advantage in the marketplace. And this isn't a, buy today, sell tomorrow, buy today. Dave and Derek and the investment team do a phenomenal job, but we're looking for opportunities inside the portfolio to add value for our clients. So it's a little bit more than the annual rebalancing, but overall you want to stay focused on that. And we can help you, especially on the 401k side, to make sure you're doing that, because that's where you see this. People make the largest mistake in this area.
Gotcha. We're talking about the value of an advisor. B stands for behavioral mistakes individual investors typically make. And they do that, don't they? They
do. And I don't think there is any more important time to talk about this than right now. When you think about what we all just went through, from March 23rd lows to where we are today, there's a lot of panic out in the marketplace. But what you need to do is you need to stay focused on the long term. And I think you and I talked about this last week. It is very important to stay focused on the long term. And what Russell did is they look at it and they say, okay, if you're an average investor, and nobody necessarily wants to be average, but an average investor, what has happened from 1984 to 2019 is because they go in and out of the market. They basically do the exact opposite of what you should do, and they buy high and sell low. And that can cost them upwards of 2%. By working with somebody who can help coach you through that, talk you through that, and keep you focused on the long-term plans, you can see a savings in the long run for you and your portfolio. A couple quick points on behavior. There's a few things that you commonly see with folks, and it's related to human biases. The first is obviously loss aversion. So they hold their winners too long. They're afraid to sell their losers. The second is overconfidence. They're just trading too much. Another thing is herding. So, what is my neighbor doing? I want to do that. I've gotten a lot of those calls. Familiarity. So we see a lot of home country bias. So where are most of your investments? They're right here in the U.S. Well, there is opportunity outside of the U.S. So if you partner with somebody, you can definitely take advantage of that. And the last thing is just truly understanding diversification. And we call it, I guess you'd say, naive diversification, but being truly diversified and setting up a diversified portfolio. And when you partner with a firm like Annex, we can really direct you and help you figure out what makes the most sense.
Brandon Lehman is a wealth manager at Annex Wealth Management, talking about the value of an advisor. We believe in it. C stands for cost of basic investment only management. Are we talking about robo-advisors?
We are, and it's very simple. You think of Betterment, you think of Schwab, Intelligent Portfolios. These are places where you can go and you can get one thing. You can get investment management basically, you could call it advice, but it isn't really. It's a portfolio that suits your needs based on you answering anywhere from 6 to maybe 10 questions. And that's it. There's no time for you to sit down with somebody, talk about your goals, talk about some upcoming events you might have. Here at Annex, one of the things I've noticed we do a lot of is we'll sit down with an individual and they say, well, this is my short-term goal. I have this. So we'll actually have a separate account with a separate risk tolerance put up just for that situation. And then we'll have a different account with a different type of investment schedule for different goals. When you work with a robo-advisor, you don't get any of that. You just have the pure cost. And the pure cost of that is surprisingly going up every year from 5 years ago when you looked at about 0.25% for a robo-advisor to nowadays on a $400,000 account is about 0.29 in a recent study that Russell Investments did.
Oh, that's way higher than I guess I thought.
It's a lot higher than you would have expected.
Sure. This is part one of a conversation about the value of an advisor. We'll be back with Brandon Lehman in a bit. Stick around for that. If we can help, head to annexwealth.com and click that Get Started button.